Well, thank you for clicking the link and coming to this video, which I'm going to talk about today, the dilemma with a 401k for highly paid business owners and executives. I talk about this a lot because it is a problem. The 401k is a great program for everybody involved, except the one downside for the high paid people is you can't get enough contribution into the plan. So when it comes out on the other end, it presents itself as a higher percentage of your final earnings. And I'm going to run across how it works today. And I'm going to run across some of the examples that I've been using in some case histories. So I hope you enjoy it, but I hope the point is that if you own a company and you have a 401k, and just because you're putting money into it, probably large amounts, 25, 30,000, it still may not be adequate for when you finally retire. And there'll be a lot of reasons for it, and I talk about that. So let's jump in and go from there and learn a little bit about it. And of course, if you have any questions, you can email me or call me. So here we are. Like I had mentioned, we're going to talk about the 401k and the great dilemma. Now, the dilemma is not for the rank and file because a 401k is a very good product and way of saving for the rank and file employees. But for the HEO, the highly earning owner, business owner, it could be a nightmare, and in many cases it is. And we want to talk about that, and I'll explain why. Well, first of all, we want to talk about the generalities of a 401k. It's 401ks are automatic for rank and file, and owners do join because it's there. So they throw their money in, and many times match it. It's good because it is tax deductible, but a great tax liability when withdrawal. People don't realize I'm getting a deduction today on a small part of my deposit. We'll call that the seed. But when you take the harvest out, which is 100% of all that growth, 100% is taxable, not just on the seed. So the tax liability becomes huge, and I'm going to show that in a little while. But it's good for the company benefit. Most employees are kind of looking for this type of benefit for the retirement for companies to have, and it helps employers hire. Now, the advantages to the 401ks, like I said, employees expect it. Good for savings for retirement, including the owner. Tax deductible as a benefit. No downside for the employee, especially if there's a match. Opportunity to invest money where normally they're not investing money. So I think this is a good thing overall. But the disadvantages to the highly compensated owner are the limited savings amount for their future. Remember, if the high paid employee owner, rather, is up there $253,000, $400,000 or higher, and the limitations of 401k, you can't put enough money in there so when you take it out in the future, it's going to represent a significant percentage of the final earnings. And again, I'll show you that. The downside for the employer is you must include everybody, even if they appreciate it or they don't. You know, not everybody that's your employee appreciates the fact that you're doing and spending your money to give them a benefit. They expect it, you know, and that's all there is to it. And that's what I mean down here, where some people just do not appreciate it, and that would drive an employer crazy to put all this money and cost in this, and people really don't appreciate it. There's no ability to use the funds before 59 and a half. Now, that's important for the employer because employers are always looking for cash. They need cash to run their business. And having so much money in these accounts doesn't help the employer when they have a cash crunch. So that's a downside. And it fails the high earning business owner in a lot of different areas because of the taxation, the forced withdrawal, the fact that they can't leave this to their family without paying a tax. So it becomes a burden on the business owner because of their income and the IRS rules. CEEP to the rescue. Because you can be selective in your program here with a CEEP, a corporate equity executive plan. And here's where the owner of a company gets to decide, how am I going to spend my money? I might be in a 401k, but I could put money in a CEEP program much more without limitations. So, and I can pick who they want in there. I could pick my key people. I can pick a family member or nobody. It could just be me. When I take the money out, it's tax-free. I don't need the IRS approval. That tax-free payout, by the way, is very big because I don't have to take it out as a retirement program. I could take it out anytime I want, use it as a family bank. Flexible contributions with no limits. So if I have a cash crunch, I don't have to necessarily make a contribution. But if I have a lot of money, I can put quite a bit of money in it. But the big thing is that's available to the business owner before 59 and a half without penalties, and they can take it out tax-free. There's no forced withdrawal and required minimum distribution at retirement like a 401k plan is. Deduction, you pick. You could take it at optional times, but you can get a deduction. And if there's a premature death starting in day one, the plan will fulfill tax-free pretty much what the employer was trying to accumulate. So these are very, 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 very important things. And when I look at some of the things that I'm really like about these type of plans are these particular things. Having the ability to get money tax-free, having the ability to use it for my business, having no forced withdrawals when I retire. Very good and very flexible for the business owner. So let's take a look at what happens when we do the scenario. First of all, you want to look over here because both the employee and the employer is going to put $30,000 in, 6% growth, and at post-retirement it'll be 3% return, 20 years to retirement, and the payout's 20 years. And the high paid person is $250. But let's take a look at what happens here when we have an accumulated value of $1.1 million for both of them. The payout is going to be $74,000 at 3% over 20 years. And you'll notice the final earnings, the future final earnings for the executive is $371. But they want 75% of their final earnings, so the final gross that they want is $278. But they got to pay taxes on that $278, so they're going to net $195. Now they're going to get $74,000, but they're going to pay taxes and net $51,845,000. So they are short $143,000 from their goal of $195. So they're 73% short of what they need. Now that's significant. And when I compare this to both of them at this point of the game, we're looking at $250 for the high paid, $100 for the worker, 25 years. We're going to contribute $30,000 a year. Let's say 6% a year growth. You'll see here, 1.7 million is the value for both of them. The income payment is $135 for 20 years each. The final pay for the executive is $523. For the employee, it's $209. So the percentage is 70% of, that's what they wanted, of final pay. But you'll notice that the final pay here is only 37%, where this represents a significant part of it. You can't see it in the slide, I don't think, but it's about it's about probably 75% of final pay. So you see, there is a big difference in why the higher paid people need to have some other method of utilizing the 401k plus supplemental executive compensation. So I hope that clears it up for you, at least the problems that we have with it. So there you have it. The story about the 401k dilemma. And again, if you are a business owner and you're a highly compensated business owner and you have a 401k, or even if you don't have a 401k, you'd want to know about the CEEP program, the Corporate Executive Equity Plan. I talk about this a lot in my writings. It was a benefit in the JFK era that a lot of companies used, and business owners became filthy rich utilizing this wonderful benefit. And it was really designed for very, very large companies, public companies, for their executives. But over the years, the product has gotten to the point where the small company can use it, and it's very flexible. It's a great program. So I hope this helps you out. If you have any questions, certainly give me a call at 203-530-6615, or you can email me at tperrone@necgginc.com. And I want to thank you for taking the time to click the link and visit with me today. I hope you learned something. Thank you.